and J4X4. Give me a second, everybody. J4X4. Are we live? Not yet. Are we live? Alright, and good morning, good evening, good afternoon, students and traders all around the world. This is Mike, the FX boss, broadcasting you live on YouTube and other streaming platforms. Let's see if J4X is willing to work. Alright, happy Monday, everybody. Good morning, good evening, good afternoon. Yeah, happy Monday. It's Monday, it's Monday, right? Alright, everybody, never forget, trading is a learnable skill when you learn in the correct way. My job is to bring you from zero to a millionaire trader in 3 years. Hopefully, in an institutional way. Hello, Alexander, how are you? And never forget, you're going to graduate from this course, everybody, when you have your chart set up and ready for trading. Number 2, you have a strategy in place, you understand how you win, how you lose. Number 3, you have a complete understanding on how this market works, so you can analyze the market and make an educated prediction. Today we have bearish candlestick formations in a downtrend, alright? And as always, if you want this free ebook, everybody, the little book of trading secrets, visit the website fxbossfx.com. If you received the book, did you read it, everybody? What do you think about the content? Give me a feedback, everybody. Do you think interesting or not? Okay, and if you want to receive the free manual, everybody, that you can download and study and ask questions and send me the email that you don't agree, you know, send me an email to mikefxboss@gmail.com, alright? And if you want to see a glimpse into the Forex course 202, please go to YouTube and give me a second, everybody. So there you go. I'm not sure about the handle, anyways, you know, it's
and
Mike
good
the
morning,
FX
good
boss,
evening,
so.
good afternoon, and
Okay,
this is Mike
on
talking,
YouTube.
Mike the FX
Alright, everybody,
boss.
that being said, let's go
Maybe not your
to
boss.
the chart and
Mike the FX boss, and welcome to the
we
introduction
have bearish
to the
candlestick
channel.
formation in a downtrend, so
this
we need to
channel,
find a
it's all about
downtrend,
you,
everybody.
okay? I'm trying to help you to...
Downtrend. Euro dollar maybe, right? Not in here, but we have... Let's open euro dollar. Euro USD, I believe it's in a downtrend. And let's go to the 15-minute chart today. Hi everybody, what do you think about? We don't do this a lot, right? But we can go to the 15-minute chart, right? 15-minute chart. I read this book, it's very useful and interesting. Thank you very much, appreciate it, Alexander. What do you think is the most difficult thing? Alright, everybody, so here and delete. Ernesto showed me how to delete all of the things. Yeah, I can also Control C, Control V, but or whatever. Alright, everybody, so euro dollar 15-minute chart, okay? Now, let's see how smart you are, everybody. Lower low, so far, okay, right in here. Let's see how smart you are, everybody. And it's a difficult, I'm going to be honest with you, it's a difficult question, alright? Okay, everybody, it's a difficult question what I'm going to ask you right now. We are going to short bearish candlestick formations in a downtrend. And when you are going to, me too, when we are going to lose, why we are going to lose? Hello Mo, how are you? Everybody, what pattern, so talking about specifically candlestick formations, what pattern make us lose trading candlestick formation in the correct direction? I mean, wow, this is a great title to learn, right? What pattern make us lose trading? In this case, it's going to be bearish candlestick formation, you know, in a downtrend. So what pattern make us lose trading candlestick formations in the correct direction? You have this on the, you can see it or maybe not. So it's right now on the 15-minute chart. Maybe you are not aware of it, but it's on all time frames. It's on all time frames. So we are going to short bearish candlestick formation in a downtrend. Do we agree, everybody? Do we agree? This is a downtrend. Do we agree? And if the market is going to push further down in here, we're going to readjust the downtrend line. But so far, this is the correct downtrend line. It's a difficult question. I give you this. What pattern make us lose trading candlestick formations in the correct direction? What do you think? Boss, what is a pattern? Uptrend, downtrend, market wave, also called market structure, head and shoulders, crowns, flags, pennants, channels, double top, triple top, quadruple top, double bottoms, triple bottoms, quadruple bottoms. All of those are patterns. What pattern make us lose trading candlestick formation in the correct direction? Meaning we are going to do the right thing and we are going to have a loser or two until the market position itself in the right way. Then we're going to win, and then the market is going to do something and we are going to have 1 or 2 or 3 losers again. And then the market is going to reposition itself in the right way, and then we're going to have winner, and then 1 or 2 or 3 losers again. Everybody, this is something that you must study, makes sense? A lot of advanced students has an issue with what Alexander read in the book, the little book of trading secrets. 99% of you guys have money problems. When it comes to trading, you have the money problem. And you are personalizing trades. You believe that when you are winning, that you are doing something in the right way, and you believe it's a myth, it's not true, and you believe that when you are losing, that you are doing something wrong or something not in the correct way. This is one of the biggest secrets of institutional traders, psychologically. Does this make sense? Boss, isn't this normal? No, it's not. No, it's not. Financial markets are upside down. This profession, it's upside down in many ways, everybody. Like hard work doesn't work, quality before quantity, money is not money in the financial markets, money is raw material. Okay, so it's not true that because you are losing 1 or 2 that you are doing something wrong, and it's not true that if you are winning 1 or 2 that you are doing something right. It's not true. Does this make sense? Exactly. We are talking about hundreds upon hundreds of trades. Hedge fund trader Mo, hedge fund trader Alexander, what pattern makes us lose trading candlestick formation in the correct direction? Come on, everybody, don't be shy. We don't bite. I'm a nice guy. Dade, how are you? Everybody, Dade was in the system workshop on Saturday with a few advanced traders, you know, from the advanced course. I hope you enjoyed date. Everybody, I know it's a difficult question. What pattern makes us lose trading candlestick formation in the correct direction? Boss, help us out. All right. Okay, everybody, let me help you out. So we are going to short the downtrend. All right, and we are going to short bearish candlestick formations in a downtrend. All right. Date says yes, I have. But time to time, we are going to short this bearish candlestick formation, and the market is going to stop us out 2 or 3 times. I cannot tell you more than this. If I tell you more than this, then I'm going to tell you the pattern. What pattern makes us lose trading candlestick formation in the correct direction? Bullish candlestick, no. We are not going to buy bullish candlestick formation, we're going to sell. It's a difficult question, don't worry, it's a difficult question. Date, we have a deal, alright? Take it easy, talking about Saturday. Don't try to step forward, date. Okay? Moses, congratulations, date. We are going to do this every Forex trading week, everybody, alright? Every Forex trading week there is going to be a winner or two, and you're going to be welcome to join. It's going to be a group call. We didn't have a group call this Saturday, we had a workshop. Everybody, the market wave is the pattern that is going to make you lose a trade on candlestick formation when you are trading in the right direction. Okay, this is so important to learn for you to understand that you didn't do anything wrong. Does this make sense? All right, there is a little bit of psychology today in this lesson, because you are learning that you are following the right process, and you are going to have 3 to 5 winners, and me too. We are going to have 3 to 5 winners, and then we are going to have 1 or 2 losers. All right, everybody, because the market is going to stop doing lower lows, lower highs, and is going to start making higher highs, higher lows, but you cannot predict this. Does this make sense? This is a little bit of psychology today mixed with trading technicals. Okay? You are trying to learn. Just because you had a losing trade, this doesn't mean necessarily that you did something wrong. And you are trying to be humble enough to understand that just because you win 1 or 2, that it doesn't necessarily mean that you did something right. Does this make sense? This profession, it's hundreds upon hundreds upon hundreds of trades. Alright, everybody? If you cannot judge yourself with a loser in here, you know, like, oh, this is what the boss was talking about, you know, market wave on the 15-minute chart too, you know, then I'm going to pat myself on the back, you know, I'm going to say, oh, good job, you know. Alright, everybody? Now, we don't see the future, so we're going to go like in here, and trend line breaking here, just an example. Not that this is the correct trend line, it's not, but just for the purpose of this exercise. Alright, this is the market, and the market started to fall. So here we have one trend line. By the way, I need to put there is not the extent, okay, it's alright. So this is one trend line, and left click, right click, extend it on the right. Alright, there you go. And we've run about trend lines. This is now the medium term trend line. Alright, so we are here right now. Okay, we are here, and we are going to wait for a retracement, and then we are going to short bearish candlestick formation. Okay, and the market is going down, it's pushing down, pushing down, pushing down, pushing down, and we are waiting for this one. Alright, so here we are, everybody. The market finally stopped going down, making lower lows or highs, and let's zoom in, let's zoom in, let's zoom in, and there you go. So would you say, everybody, that it's a counter trend line break like in here? Would you say, everybody, this is a bearish candlestick formation? Type in the chat, yes it is, or type in the chat, no it's not. Type in the chat, yes this is a candlestick formation bearish, or type in the chat, no this is not a bearish candlestick formation. For your strategy, everybody, we are going to have 3 different stop loss levels. Stop loss level number 1 is going to be bearish candlestick formation, as an example. Stop loss number 2 is going to be the short-term trend, which is up in here. And extend, not anymore, so extend this one, extend, not anymore. And the third is going to be above the downtrend line. Alexander says yes. All right, everybody, where do you want your stop? Do you want your stop, Alexander and everybody, do you want your stop at stop loss number 1? Stop loss number 1. Do you want your stop loss at stop loss number 2? Can I clone this one? Or do you want your stop loss on stop loss number 3? There is no right or wrong. Different strategies are going to have different rules about different stop loss levels. Alright? There is no right or wrong, it's your strategy. Don't let anybody be smarter than you, it's your strategy. How do you feel comfortable? For candlestick formation, the correct stop loss is number 1. Yes, it is, says Mo. Everybody, now we're moving forward the conversation, right? So today's lesson is we are going to have 2 or 3 losers when the market is going to go from extension to retracement. And number 2, we're moving the conversation forward. Your entry setup can say, alright, I'm going to enter with the bearish candlestick formation. Okay, counter trend line break at past resistance, and my stop loss goes on candlestick formation or short-term trend or trend line. So you have 3 variations of stop loss levels. Alexander says, I would like to put my stop loss on the candlestick formation. Anybody else? So I need to clone, right? 1 per 2. Boss, what you do? Me predominantly, but this is me. My stop loss predominantly goes on the market wave, on the 4-hour chart. But this is me, you know, this is my personality, long-term swing trader, 4-hour chart, daily chart. Right now we're on the 15-minute chart. Stop loss number 1, anybody else online? Student traders on YouTube? Hedge fund trader date, where would you put your stop loss? There is no right or wrong, all the stop loss are good. Alright, so let's see, what if I put my stop loss on the short-term trend? So, clone. And remember everybody, today's lesson is you are going to have 2 or 3 losers because you cannot predict when the market is going to go into a retracement mode. Alright, let's see how this is going to play out. The market is going sideways, 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 going down, going down. Going up, going down, retracing, further up, going down, up and down, consolidation, finally start moving down, falling, right? Finally, and consolidation. Whoop, what happened? Stop loss number 1 got hit. Everybody, so stop loss number 1 was here. Stop loss number 1 was hit. Okay. See everybody, don't be like, you know, some of you are like, oh god damn it, you know, what am, you know, I was... You didn't do anything wrong. Does this make sense? Maybe the market is going to push into a retracement mode. We don't know. So stop loss number 1 is here. Let's see what the market is going to do. And then, so... the short-term trend, right, as a stop loss. This was just an example, everybody. Okay, so the stop loss number 1 was not good enough this time. We're not talking about right or wrong. It's a probability game after hundreds upon hundreds upon hundreds on trades, alright? So far the market is still in a downtrend. Extension, retracement, extension, lower low. Alright, and so we are here. Okay, now we're going to move the stops. Stop loss number 2. We need to readjust the trend line. We need to readjust the trend line. Alright, so we are here right now. We're going to wait for the next retracement, right? And so here is the retracement, everybody, if you want. Same story. Do you want to short the market, everybody? Do you want stop loss number 1 or stop loss number 2? So stop loss number 2 is safer, boss. Yeah. Everybody, this is a strategy issue, right? Because you are trying to get to the Holy Grail, which doesn't exist. Stop loss number 2, it's safer than stop loss number 1. Yes, it is. But stop loss number 2 needs more time to get you money. Does this make sense? If I put the stop loss to the stop loss number 1, and if I'm entering here, then the market price action doesn't need to go far away for me to win 1/2 risk reward ratio. Does this make sense? But on the counterpart, if I put the stop loss on the safest place, comparing stop loss number 1, stop loss number 2, you know, then it's going to take much longer. And many times, especially on the smaller time frames, the winner becomes the loser. Does this make sense? Let's make a poll again, everybody. Do you want to enter with stop loss number 1 or stop loss number 2? Most says stop loss number 1 again. Very good. Anybody else? Hedge fund trader Alexander, hedge fund trader Date, stop loss number 1 or stop loss number 2? There is no right or wrong. Stop loss number 3 is the trend line, right? Stop loss number 3, it's up in here, is the trend line. downtrend line, stop loss number 3. And think a little bit about everybody, about your strategy, okay? When you're trading different patterns, where would you put your stop loss? Number 1, number 2, right? Let's see how this is going to play out. So we are here, and the market is moving, falling down, going down, oops, again, out, up again, consolidation, finally moving, and stop loss number 1 got hit in terms of take profit, everybody. So it was a winner. Now let's see stop loss number 2. Stop loss number 2, winner 2. Alright, so we are here right now. Both of them won. Alright, so we are here right now. Extension, retracement. Extension. I believe this is the high. Retracement, extension. Let's move the stop loss number 1 and stop loss number 2 and stop loss number 3. So we are here waiting for a retracement. Alright, so this was the news event, and counter trend line breaking here. Stop loss number 1 above the, well, this was a difficult candlestick formation, right? On a retracement. Talking about bearish candlestick formations in a downtrend, you know, it's everybody does 1, 2, 3. Okay, it's kind of maybe tweezer tops, you know, maybe, or the morning star, whatever. You don't need to remember the names. Okay, so one more time, stop loss number 1, I don't have it, everybody. So stop loss number 3, stop loss number 2 in here, and clone. This would be stop loss number 1, stop loss number 1. So let's see how this is going to play out. If this would be the, where is the candle? So at the close of the candle, right? So this would be 1 and clone. This would be 2 and clone. This would be 3, 1 per 2, and stop loss number 2 is up in here. See everybody? Stop loss number 2 is safer, but the distance, right, that it must go, it's far away. Like Shrek. Far away. Let's see how this is going to play out, everybody. Market going down and almost hit the stop loss of Mo and Alexander up in here, almost, and let's see, almost, and where we stopped out, Alexander and Mo here. So stop loss number 1 was hit, stopped out, Alexander and Mo. What about stop loss number 2? Stop loss number 2. And we are here right now. This is Eurodollar so far. Everybody, what is the most difficult part in getting to the edge is that somebody's thinking right now, oh, but I didn't put the stop loss number 1 on that trade. When you build the rules, you must do over and over and over and over the same things. Does this make sense? When you define the rules of the stop loss on the pattern, it might be the candlestick formation, it might be the short-term trend, whatever. You know, when you define that you're going to put the stop loss on the downtrend above the relevant high or low, whatever, in an uptrend, then you must do this always. You cannot pick and choose stop loss levels. Does this make sense? Retail traders never come to a profitable edge because you are always changing parameters. Does this make sense? Institutional traders, if we change parameters, we get fired. Is that simple? Does this make sense, everybody? You cannot pick and choose rules. Boss, can I have 2 different stop loss levels? No. Not in Forex course 101, no. You know, you can have different stop loss levels for different patterns. That is a yes. But you cannot have 2 different stop loss levels on the same pattern, because then you are picking and choosing. Does this? I don't care what anybody else is saying. You can call him or her, you know, come to Dukascope Academy and talk to the guy. It's wrong. Make sense? Why is wrong? Because your trading have no structure. Make sense? If you put 2 different stop loss levels on the same pattern, you are basically trading 2 different setups. You are basically trading 2 different strategies. Oh, but my strategy is the same. No, it's not. It's a different strategy. Moses. Make sense? Alright, everybody, now let's go to CHF JPY. Let's see CHF JPY, 15-minute chart, same story. Give it a second. Come on, JForex, it's Monday. Come on, JForex, it's Monday. Back in time, back in time. Or let's go to the 4-hour chart, maybe. 4-hour chart. Okay, everybody, so we're going to trade bearish candlestick formations in here. What pattern is going to stop you out? Trading candlestick formations in the right way. What's the pattern? What's the pattern, everybody? You are going to have 3 to 5 winners, and then you're going to have 1 to 2 losers or 3 losers in a row. Okay, so this is the first swing, extension, retracement, extension. All right, out this one, downtrend line, Jane Forex. Come on, downtrend line. And right click and extend it on the right side. Okay, same story, everybody. We're going to wait for a retracement. This is the market now. CHF JPY on the 4-hour chart this time. This is the market, and the market starts retracing. And we're waiting, you know, and waiting for a counter trendline break, waiting and sideways consolidation. All right, and still consolidation. All right, this is a textbook, everybody. Beautiful bearish candlestick formation in here. 1, 2, 3. What is this called? And as always, everybody, not to show you too much, you are going to have stop loss number 1 it's above the trend line, which equals bearish candlestick formation, and then you are going to have stop loss number 2 above the downtrend. Give it a second. Give it a second. All right, everybody. Who in here want to short bearish candlestick formation? Stop loss number 1. And something is happening with Bitcoin when Fibonacci are barking. Something is happening with Bitcoin. Those guys are barking. Let's see. BTC. Something's happening with Bitcoin, everybody. When those two guys are start to bark. Do you hear them? Oh, it's going up. Oh, see everybody? My two dogs, Fibonacci. Buy. Buy. Oh, it's going up. Oh, nice. Thank you, guys. Alright, so this is today, right? Today, Bitcoin is rallying. Alright. Alright, everybody, so... No, it's not a joke. When they're barking, it's always... You can watch the previous years giving classes, everybody. Alright, everybody, Mo and Date and Alexander and everybody else, do you want to go to stop loss number 1 or do you want to put the stop loss on the stop loss number 2? There is no right or wrong. What do you prefer? Stop loss number 1 or stop loss number 2? In the meantime, I'm going to clone, whoops, 1 per 2 in here. And yeah, guys, whoops, cloning here, 1 per 2, right? Safest place, it takes a longer time compared to the stop loss number 1, stop loss number 2. Mo number 1, Alexander number 1, Date number 2. Let's see how this is going to play out, everybody. And stop loss number 1 won. What about stop loss number 1 won, everybody? And one last push, maybe. Stop loss number 1 won. And stop loss number 2 too. Alright, both are winners. Okay, now everybody, we are here again. Now I cannot make an exercise because you've seen the chart, right? But extension, retracement, extension, retracement, extension, retracement, right? And give me a second. So this would be, everybody, this would be an example of the counter trend line break. Maybe not the best one. Give me a second, everybody. So this one and here and here. Okay, it doesn't matter if you would short the market in here. So circle if you would short the market in here, or if you would short the market in here, all right? Or if you would short the market in here, everybody, would we, or you would short the market, everybody, so here, if you would short the market in here, okay, all of those entries candlestick formation Y. So if this is the stop loss, right, above the bearish candlestick formation, and if you go 1 per 2, can you see everybody? All of those entries would be a loser. Bitcoin must be going up to the moon. They are barking a lot. Yeah, they don't know what they're doing, but they are signaling. You know, they have the monitor. You know, in the den. You know, they have the mouse. You know, and everybody, can you see it? Every single time, if you would short bearish candlestick formations, you know, and you would go 1 per 2, you would lose 4 times. Can you see it, everybody? 1, 2, 3, and last there would be this one, you know. It doesn't really matter if you put the stop loss above the bearish candle or up in here, you know, the market would never give you 1 per 2. Agreed, everybody? So when this happens, pat yourself on the back. You didn't do anything wrong. Boss, but I lost. Me too. Me too. What's the difference? Try to study the charts and try to spot retracements, you know. So you are going to have one winner for sure. And then you are going to have one loser for sure, you know. So professional traders, when the market goes into retracement, we do have 1 or 2 losers every single time. Make sense? It doesn't matter retail or institutional, it's a thing of training. The sooner that you can spot, everybody, here you are winning, shorting a downtrend and bearish candlestick formation, and here you are losing, shorting a downtrend and bearish candlestick formation. As soon as you can spot a retracement, the lesser losers you are going to have. Does this make sense? This is where you are not doing anything wrong, and you are going to have 3 losers, 2 losers, shorting bearish candlestick formations. Agreed, everybody? If I clean up the chart, this retracement, it's not vivid yet. It's not clear. If I clean up the chart, that you can see pure price action, you know, would you say that, oh yeah, I can see retracement going up? It's not that vivid, is it? It's not that obvious if you want a different vocabulary. Is it obvious, everybody, that here the market is going to push into a retracement? The market was making hard highs, hard lows here too, and it pushed down and down. Is it clear for you that, oh, this, you know, here you're going to short bearish candlestick formation, but let's make one, alright? So uptrend line, you know, something like this, because this is the retracement, right? Higher highs, higher lows, retracement, broke off the counter trend line. Can you see it, everybody? It's not that obvious. And Forex course 101, Forex course 101, how do you know that a retracement has started, everybody? Is this a retracement on the market wave? Type in the chat, yes, this is a retracement on the market wave, or type in the chat, no, this is a retracement on the downtrend. I'm going to help you. So relevant high, relevant low, relevant high, relevant low, relevant high, relevant lower low. Is the price action in the circle a retracement on the short-term downtrend, or is the price action the retracement on the market wave? What's the answer? No, this time there is right or wrong. Oh boss, there is no right or wrong. This time there is right or wrong. No, it's not a retracement of the market wave. Applause today, very good. No, it's not. So only and only the market breaks this high. Alright, then you stop shorting the market. Does this make sense? You've learned also support, resistance, pivot points, and you've learned that in a retracement the money was made from here up to here, and you've learned that from past resistance to the support, this is called the no trade zone, that you should not trade in here, everybody. Remember the lessons. If not, go to YouTube, Dukascopy Academy, find those lessons, rewatch it. Okay, so this is the relevant high and this is the relevant low. So it's not that obvious that this price action in here, everybody, it's not that obvious, isn't it? It's not that obvious that this market is in a retracement. Can you see it, everybody? And boss, I cannot see it, I have problems, I have issues. Go from the 4-hour chart to the daily chart and zoom in. Alright, and then you connect high to low, low to high, high to low, not a high, high to low, low to high, high to low. Alright, everybody? Retracement on short term, exactly. Okay, so if you lose in here on the small time frames, don't judge yourself, okay? Because if you judge yourself, everybody, if you judge yourself in here that, oh, I must be doing something wrong, when there is the next time to enter, you are not going to enter because you are going to be afraid. Does this make sense? So the market was making higher highs, higher lows, and then made a lower low in here. Make sense? And you would see consolidations, right? You would see consolidation. Maybe it was, well, I don't know, maybe it was, right? But anyhow, you know, when the market starts making, this is the signal now, lower lows, lower highs. Can you see it, everybody? So if you are going to judge yourself that you must be doing something wrong because you lost 2 times or 3 times with bearish candlestick formations, then down here you are going to be in fear and you are not going to short the market again. Does this make sense? Alright, everybody, see you back tomorrow. Until tomorrow, stay strong and practice. I'm going to see Bitcoin. Alright, everybody, see you tomorrow. This is the boss signing off.